To big cap technology, Apple shares continuing to slide following Warren Buffett and Berkshire Hathaway slashing its Apple stake by about half.
Welcome back to the channel. In today's video, we are diving deep into Warren Buffett's surprising move regarding his holdings in Apple, his impressive cash pile, and what this all means for the investment landscape. Stick around to get all the details and some insights on what you should be considering in your own investment strategy.
So we will end up in, unless something dramatically happens that really changes capital allocation, a strategy, and we will have Apple as our largest investment.
Here is a quick summary of what we'll cover in today's video. Berkshire Hathaway's significant reduction of its Apple holdings, the record cash pile that Berkshire has amassed, other notable changes in Berkshire Hathaway's investment portfolio, the current concentration of Berkshire's holdings in a few key companies, implications for investors, and what you can learn from Buffett's moves. Now let's dive into the details. First up, let's talk about the headline-grabbing news. Warren Buffett's Berkshire Hathaway has slashed its stake in Apple by nearly 50%. According to Berkshire's second quarter earnings report, the company's holdings in Apple were valued at $84.2 billion at the end of the quarter. This is a substantial drop from 790 million shares to 400 million shares. This sharp sell-off is particularly notable because Buffett is well known for his strategy of holding onto stocks for long periods. You might remember that I recently did a video where I mentioned that nearly half of Berkshire's capital was tied up in Apple stocks. Well, that's no longer the case. This significant reduction changes the landscape of Berkshire's portfolio and indicates a strategic shift.
Then there's the idea that, well, what does Buffett know that the rest of us don't? Because he takes off half of his Apple position in the second quarter, so that stock's down a bunch.
So I was surprised because you tend not to see him do things like cut a position in half. He either gets all the way out or he gradually reduces. So he has done things like this before. But again, this is a little bit more on the rare side, especially when it's his largest position. Keep in mind, Apple was half of Berkshire Hathaway's stock portfolio and worth about a quarter of its market cap.
Apple, which boasts a market cap of over $3.3 trillion, did not respond to CNN's request for comment on this move. This lack of a response leaves us to speculate on the reasons behind this major sell-off. Could it be due to valuation concerns, market conditions, or perhaps a new direction for Berkshire's investment strategy? This isn't the first time Berkshire Hathaway has downsized its stake in Apple. In the last 3 months of 2023, Berkshire sold off 10 million shares of Apple stock, which represented about 1% of its holdings in the company at the time. Additionally, in the first quarter of 2024, Berkshire cut its stake in Apple by 13%. These earlier moves might have been a precursor to the more drastic reduction we are seeing now. While reducing its stake in Apple, Berkshire Hathaway has reported a record cash pile of nearly $277 billion for the second quarter. This is up significantly from about $189 billion in cash and equivalents reported in the first quarter. This massive cash reserve gives Buffett and his team a lot of flexibility to take advantage of new investment opportunities as they arise. In the second quarter alone, Berkshire Hathaway sold off $75.5 billion in stock. This isn't limited to just Apple. They also reduced their stake in their second largest position, Bank of America, to $41.1 billion. This diversification of liquid assets could be a strategic move to prepare for potential market corrections or to seize new opportunities that may emerge. The earnings report also highlighted that approximately 72% of Berkshire's aggregate fair value is concentrated in just 5 companies: American Express $35.1 billion, Apple $84.2 billion, Bank of America $41.1 billion, Coca-Cola $25.5 billion, and Chevron $18.6 billion.
We always look at every stock as a business, and we have no attempt made to predict markets. We have no attempt made pick stocks. I went through many years doing the wrong thing. I got interested in stocks very early, and I was fascinated by them. And I wasn't wasting my time because I was reading every book possible and everything else. But finally, I picked up a copy of The Intelligent Investor in Lincoln, and there was a few sentences in there that said much more eloquently than I can say it. But if you look at stocks as a business and treat the market as something that doesn't tell you, isn't there to instruct you, but it's there to serve you, you'll do a lot better over time than if you try to take charts and listen to people talk about moving averages and look at the Fed pronouncements and all of that sort of thing. And so that made a lot of sense to me then. And the way I've been allowed to deploy it, Charlie and I talked about this, of course, constantly.
This concentration suggests that while Buffett is reducing his stake in Apple, he still maintains significant investments in a few key companies, reflecting his belief in their long-term value. Warren Buffett's strategy often reflects his assessment of market conditions. For example, the Financial Times reports that Berkshire's Apple stake reduction was part of a $76 billion selling spree. This move generated an after-tax gain of $47.2 billion. This sale not only boosts Berkshire's cash position, but also reflects Buffett's disciplined approach to valuation. Despite the sales, Buffett reassured investors at Berkshire's annual meeting in May that Apple remains a core long-term investment. He emphasized the importance of building a cash position under current market conditions, finding limited attractive alternatives in equity markets. Interestingly, Apple has been one of Berkshire's most successful tech investments, delivering a total return of nearly 800% since Berkshire first disclosed its investment in 2016. This marks a significant shift from Buffett's past reluctance to invest heavily in technology companies. So, what does this all mean for you as an investor? Here are a few key takeaways. Diversification is key. Even though Buffett has reduced his stake in Apple, he still maintains substantial holdings in a few core companies. This balance between concentration and diversification can be a useful strategy to mitigate risk while still capitalizing on high conviction bets. Cash is king. Buffett's massive cash reserve is a reminder of the importance of liquidity. Having cash on hand allows investors to take advantage of opportunities during market downturns or under favorable conditions. Adaptability. Buffett's willingness to reduce his stake in Apple, despite his reputation for holding stocks long-term, shows the importance of being adaptable and responsive to changing market conditions and valuations. Long-term perspective. Despite recent sell-offs, Berkshire's portfolio remains focused on companies with strong fundamentals and long-term growth potential. This underscores the value of a long-term investment horizon and thorough research. Market timing and strategy. While it's impossible to perfectly time the market, strategic shifts like those made by Buffett can offer insights into broader market trends and potential opportunities. To wrap up, Warren Buffett's recent moves with Berkshire Hathaway provide a fascinating glimpse into the strategy of one of the world's most renowned investors. By reducing his stake in Apple and an amazing record cash pile, Buffett is positioning Berkshire to navigate future market conditions with a robust and adaptable approach. As individual investors, we can learn a lot from these strategies, particularly the importance of diversification, liquidity, and maintaining a long-term perspective. If you found this video helpful, don't forget to like, comment, and subscribe for more insights and updates. Let me know in the comments what you think about Buffett's recent moves and how you are planning to adjust your own investment strategy. Thanks for watching, and I'll see you in the next video.